Greetings, members, one and all of the Salivation Nation. The statement that silver is making, buy me in the physical form, to anything else. Let's explore. Yes, this is an article that comes to us from Seeking Alpha, author Andrew Haidt. And I think it's quite an interesting summation and a look at the different silver instruments that are out there as opposed to the physical metal and kind of that divergence we've been seeing as of late. And this is something we've been seeing related to the present crisis, the black swan event that has plagued us here. And so we're going to take a look at this here. The global pandemic has delayed many prosecutions. The cases facing traders and institutions on abuses of the precious metal markets are no exception. With far more pressing matters facing the world financial markets, the author would not be surprised to see prolonged delays before prosecutors present their cases against individuals. So what about the JP Morgan spoofers and the like, and what we've been seeing in there, the racketeering? And we'll see. We haven't heard much news on that lately. When it comes to financial institutions, we can see the investigations run out of steam and the issue swept under the carpets of justice. The silver spoofers and banks have turned a blind eye to misbehavior, could wind up being saved by the virus. Meanwhile, the action in the silver market has been wild. Since the week of February the 24th, the price has traded in a range from a high of $18.92 to low of $11.74. We remember those times very clearly here on the continuous futures contract on COMEX. The $7.18 range on is the widest since 2016, and we are only in the fourth month of 2020. On Thursday, April 9th, nearby May silver futures settled at $16.05 per ounce, above the midpoint of the trading range, an incredible feat considering the metals fell to the low in mid-March. Risk-off periods can create incredible price volatility in markets. In 2008, during the global financial crisis, the price of silver dropped from $21.18 to $8.40 per ounce. So that is quite something to see. We're not anywhere near to that level. So in that regards, even in the paper markets, we can celebrate silver. That is quite interesting. At the end of last week, the global pandemic continued to impact markets across all asset classes. Until scientists develop treatments and a vaccine, volatility is likely to continue. The author continues to believe that the actions of governments and central banks are incredibly bullish for the prices of silver and gold, that's for sure. Silver's recent bounce may be a sign that it is ready to catch up with the yellow metal. The author favors silver, but I'm very wary when it comes to silver mining stocks in the current environment. A Global X Silver Miners ETF product, SIL, is a diversified product that holds shares in many of the leading silver mining companies. However, they may not react to higher prices as they have in the past. Silver failed to make a higher high in late February when the price rallied to $18.92 on the nearby COMEX futures contract. Last September, the price reached $19.54 when it ran out of steam to the upside. The chart highlights that silver futures plunged from $18.92 on February the 24th to $11.74 on March 18th. In only 3 weeks and 1 day, silver lost 38%. In 2008, the drop from $21 to $8.40 per ounce took 7 months. The weekly chart shows that price momentum and relative strength indicators fell to oversold readings, but both turned higher and were at just below neutral conditions at the end of last week. Weekly historical volatility rose from below 12.5% in early February to 74.14% on Thursday, April 9th. The range in silver since 2016 has been from the recent low of $11.74 to the late 2019 high of 19.54%. The 50% retracement stand at $15.64 and with the price settled above the midpoint at the end of last week. It's interesting to see what these numbers will look like adjusted for inflation from these time periods as well. So that is interesting to see how that's playing out. Open interest in the total number open long and short positions in the futures market. When a market is trending, a rise in open interest is a technical validation of the move to higher or lower. It's an area that I kind of steer clear of to kind of see what is going on and what the future will be. But anyway, silver moving ahead and skipping past that section. Silver traded below $12 in 3 sessions and March 16th, 18th, and 19th. The precious metal was below $13 level for only 6 sessions. While there are opportunities to purchase silver at these lows, the physical market tightened up significantly as the price moved to those lows. Premiums in bars and coins soared, and many dealers did not have metal available for buyers. On the 18th of March, when the price of silver was trading below $12 per ounce, the premiums were astronomical. 90% silver coins were trading at almost $8 premium to spot, and 1-ounce silver American Eagles were at over $20 per ounce. It was virtually impossible to purchase physical silver at a price that was lower than the highs for the year when silver was trading at its lowest price since 2009. So the bottom line is to trust the physical. The recent action in those physical silver markets was a sign that a bird in the hand is worth 2 in the bush. Owning the physical during periods of distress in markets is preferable to products that replicate the price action in the metal. Products like SLV that hold the silver metal and USLV, which is a triple leveraged silver product, followed the price lower and then higher as the metal recovered. However, this paper silver depends on the integrity of the product if the squeeze continues for a prolonged period. There are no guarantees when it comes to anything but the physical. And you know the old saying, and I know people are screaming it as they watch this video, if you don't hold it, you don't own it. The author has been a champion of silver ETF and ETM products as they have an excellent track record of following the price action in the futures market. However, in the current unprecedented environment, he prefers to hold the physical metal. Well, you know what, Andrew, I'm going to have to disagree with you. I always prefer the physical metal. The only asset that is silver is the metal itself. Exactly right. Everything else is just paper. It's just a ghost of what reality is. And the ETFs really aren't tested. And they really can't be tested. But they are being tested in this time, especially with this price divergence. And here's 2 reasons to be wary of the mining shares. SIL is diversified, but that may not be enough. He's also been an advocate for buying diversified silver mining ETF products in the past. In the article in March 7th, he suggests ETFMG Prime Junior Silver Miners ETF trades like silver on steroids. It tends to be more volatile than the Global X Silver Miners ETF product, which holds a portfolio of the leading gold mining companies as opposed to the junior miners. And so there it is. So SLIL talks about it. But really, in the end, I think the thing that we can take away from this article here is that this guy, and I've covered him before in previous things, and it does talk about the ETFs and the paper markets a lot. And again, even though he is changing his tune at this point, I believe he still believes in the ETFs, and there's nothing wrong with the ETFs with the paper silver. You know, I look at it as 2 different markets, and it's an area that I don't like to diversify in, but I know other people in this community do, especially for those who play the stock market, because it's a way that you can take a low-risk move into the precious metals without having to worry about shipping, premiums, and liquidation that you would for the physical. These are easily very liquid with a very little premiums tied to them, and trading fees and the like, and it's a way to protect and hedge in that environment. For those of us that are actual physical stackers, it's a world that is sort of alien to us. But I do understand it from a practical standpoint in terms of liquidity. You know, it's very easy to liquidate a digital asset than it is a physical asset. Much easier. And I think that is the appeal of the blockchain and cryptocurrencies. Before there really were cryptocurrencies, this is the world that people operated, especially for those who were savvy into the markets and the like. And this is it. This is the world they traded in, and they could get into gold and silver in this regard. But I think Andrew Height is reaching to the point of where he is seeing this divergence and realizing that the true market is, and where you should put your trust, is the physical metal compared to any other products out there, because it is performing very well, especially on the sell side, but even on the buyback side too, it is starting to increase and perform better. In the end, I believe that if you are in the stock market, and if you happen upon this video and you trade and you have diversified and dabbled in with the ETFs for SIL or SLV, and these mining stocks for GLD and the like, consider stacking some of the physical as well, because it's the ultimate hedge, I believe. The physical is an even greater hedge than the safe havens of the COMEX and the like, where there is manipulation. And they talk about it, how this manipulation is not being policed right now. Investigations are stalled. And I believe when you look at that, and you take a look at where the prices are today for the precious metals, you can see that these prices here, which are based off the paper markets and the COMEX and the LBMA, well, they're just numbers on a screen. Because when you want to buy, you're not going to get anywhere near normal premiums in this day and age for a myriad of different reasons. But this may be the new norm. We'll find out. But nonetheless, it is what it is, and it's nice to see some of these paper traders coming on board on the physical side. That's where the demand is, and that's where the love is. So there you have it. Post your thoughts below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.